Credit and Collections Conference. My name's Colin White, and we're here today at the Commercial Credit and Collections Conference talking about different opportunities and challenges and threats across for commercial credit managers, FDs, businesses at the moment. So yeah, we've just had a session, really interesting session just now, looking at the New World Trade Credit risk assessments and trying to understand what the challenges are and what the hopefully some positive notes came from that. I think the risk with where we are with most events at the moment is talking negatively about what's going on. So we're trying to find some positive stuff, but there's no doubt that there is a massive problem out there in relation to fraud, and we're going to look at that in our next session now. But before we get into the nitty-gritty of that, I just want to talk you through the platform that you've got in front of you for the people who are viewing, because we'd like for you to be involved where possible. So as you can see on the screen, you've got information on the event and this session. You've got information on our speakers as well. Have a look at their profiles there on the site, and there's one or two things you can download as well if you feel you want to find out more information. And you can also register for our next session, which follows this as well. We've got a couple of more sessions taking place this morning and early this afternoon. But yeah, and the most important part of the controls in front of you is you've got a speech bubble, and we really like if you've got any questions or experiences in relation to this subject that you want to share with our panel and our chair. He will put them to our panel if they're relevant, or if we've got any kind of thoughts on that. We'll try and answer that for you. Anything we don't cover, we're writing a review of the event next week, so we'll try and answer those questions for you offline as well. But enough from me. Chairing this event, I've got Brendan Clarkson from Begbies Traynor, and he's going to take over and chair the session. And after that, he's introduced himself, he'll introduce our panel, and we'll get the discussion going. So Brendan, over to you.
Thanks, Colin. Morning, everyone. So my name's Brendan Clarkson. I work at the Begbies Traynor Group. My role is Head of National Credit Services for the organisation. I work purely with creditors. We're giving expert advice, anything insolvency based, both corporate and personal insolvency. I'm going to go straight into the session as I'm conscious of time. So I'm going to introduce Anna Ruffley. Anna, did I say your surname right? Is it Ruffley? Sorry, apologies. So, Anna, do you want to give us a couple of minutes?
Yeah, absolutely. Well, thanks very much for having me, everybody, today. My name's Anna, and I'm the Head of Insight at the Lending Standards Board. And to start off with, I should probably explain a little bit about what we do. So we're the primary self-regulatory body for the banking and lending industry in the UK. And we've got a clear goal, and that's to drive fair outcomes for personal and business customers within financial services. And we do this through robust independent oversight of the standards and codes that we set and oversee. Our registered firms comprise the major UK banks and lenders, credit card providers, debt collection agencies and debt purchase firms. And by signing up to our standards and crucially adhering to them, those firms send a clear message to their customers that they are committed to raising the bar high when it comes to ensuring good customer outcomes. And my role and that of the Insight team is to really help our registered firms to embed the standards and codes and to disseminate best practice to help raise industry standards. And we do that through roundtables, issuing thought pieces and publishing research. I'll hand back to you now, Brendan.
Thanks, Anna. So next, Natalie Todd. It's Cook Young Keedon.
Morning, Brendan. Morning, Brendan. Thank you. Yes, my name is Natalie. I'm a solicitor at Cook Young Keedon, or CYK. I'm a solicitor with experience in litigation and arbitration involving banking and financial services, insolvency, trust, contractual, partnership, shareholder and commercial disputes. I have a specialism in fraud and asset recovery. My firm, Cook Young & Keedon, is a boutique disputes firm based in London, working for international and UK businesses and high net worth individuals. Just before we start, I think it's probably important to set out some context as to where we all fit in. So when a fraud is perpetrated, you've got a number of options, including contact action fraud with the police, inform the credit agencies and any regulators. Over to Anna on that one. And then you can consider a civil fraud claim or insolvency options, which are my areas of specialism. If you're fortunate to discover the fraud soon after it's been perpetrated and you think there's a possibility that stolen funds are still in an account or have recently just left an account, you should instruct solicitors to consider immediately writing to the bank, exchange, or third party holding the assets. You should consider freezing order relief. In the event there are assets you can identify, these should be locked down so that you can then enforce a future judgment. Disclosure can be also a really good tool when seeking to ascertain the nature of the fraud and the location of the assets. So there's a number of tools at your disposal. You can commence a civil fraud claim as well as going to the police, as well as going to the regulators. You don't need to choose one option over the others. It much will depend on your circumstances. Back to you, Brendan. But you're muted, Brendan. No, we can't hear you.
Yeah, Brendan's muted. Sorry, Colin here. Shall I hand over to Bryony? Bryony, if you could introduce yourself, that'd be great. Sorry to step in, Brendan.
No problem at all. So first of all, I'm really sorry. Luckily I'm a credit manager and not a technical specialist because I have problems getting on the video today. So apologies for that. I'm Bryony Crossland. Some of you may have known me. My maiden name is Bryony Pettifer. I'm the director of EMEA Financial Services for a company now known as Wesco Annixter, a 16 billion Fortune 200 company, looking after the EMEA region. And my role on the call today is to talk about some B2B situations that we've experienced and things that we're doing or have done or have learnt in the fraud arena. I also have a dual hat. I'm at on the advisory council for the Chartered Institute of Credit Management in the UK.
I believe Brendan's still muted, so I'll help Colin here again. Sorry, I'll help Brendan in a minute and get unmuted. But Bryony, if you could give us a bit of background to your experience, your company's recently had with fraud.
Sure.
and the cyber threat you've experienced.
Of course I can. So this year alone, we've had around 4 cases of quite complex, is how I described it to the group on the call today, of quite complex situations where businesses have either been set up and tried to apply for credit with us as a business. One of which, unfortunately, we had a hit of about £70,000, which I'm not proud of at all. But we do, I'm going to call it a post-mortem. Sorry if that's not the right phraseology, but we kind of go back over what could we have seen, what could we have done differently. And the one that hits me most, and I think would surprise all of you, and I can share details offline if anybody's more interested in digging into this. They'd set up a company on Companies House, valid, and we know that Companies House don't check things, but that was appeared to be a genuine company with accounts, files. They had a bricks and mortar address in Manchester. They had 2 landline phones. Various things like that. So in terms of what appeared to be a genuine credit application and business, that it all looked good. With the interaction with the customer was solid. They looked like they'd paid us correctly on a credit card, which then appeared as a chargeback. They also looked like they'd deposited money in our bank, which then was referred back as fraudulent checks. So all the way round, it was horrible. I still feel sick saying it out loud. But actually, what did we learn? That they're clever. They're getting better in terms of what they do and how they do it. And what I'd like to discuss a bit later on this call is how we as a group can all refer and try and find these guys and stop them doing it again. Is that okay?
Yeah, it's great. Brendan, I think you're back with us, aren't you?
I can't see anyone, but yes, I am back.
Yeah, is that right?
Yeah, okay, no problem. Sorry about this, guys.
Don't worry.
Okay, so I'm a little bit out from there. So I guess, shall we start with the first question then? I guess the first question is, the pandemic has really highlighted the potential of fraud in this country, with CBILS fraud being a primary example. What has changed during the pandemic? Natalie, should we start with you?
Yeah, sure. I think the pandemic has really resulted in a massive increase in fraud. Criminals have exploited the online world and businesses' weaknesses during the pandemic, when many companies had to look to new suppliers or customers in order to continue to trade. It was difficult to fully vet and screen these new third parties when there was so much pressure to bring products or services to the market and to continue operating normally. Needs to say, many fell victim to fraudsters while their attentions were elsewhere due to these other pressures. The other aspect is many businesses took advantage of the government-backed loans during the pandemic, and many have since disappeared without repaying a penny. The speed of the rollout of these loans meant that many of the usual underwriting checks weren't carried out. Many companies will have downed tools, of course, during the pandemic, but there's suspicions that many have simply just shut down purely to avoid repaying their loans. Companies' house data that they've collated suggests that strike-offs increased by 800% in the first 3 months of 2021 compared to the same period in 2020. And the bounce back loan scheme was subjected to significant fraudulent claims. Latest estimates show that of the 47 billion paid out, 17 billion is already expected to be lost, and 4.9 billion of that, so over 10% of the loans, has been lost to fraud. Lenders are seeking to have these companies reinstated by Companies House in order to pursue debt recovery. Obviously, where loans were backed by personal guarantees by the company's directors, lenders can go after those individuals directly. Otherwise, it's quite an expensive process, but the government's been alive to this and has enhanced the powers granted the Insolvency Service so as to enable it to investigate and disqualify the directors of dissolved companies. I hope that gives you a flavour as to some of the statistics that we're talking about, but I think considerable effect. The pandemic has caused considerable effect.
Natalie, was there an issue before? Well, there obviously was an issue before CBILS. I mean, why did the government not do anything at that stage?
I think just the speed at which the government had to roll out all of these loans, the pressures it was under to try and maintain a stable economy meant that it was rolling out all of these loans. Many businesses took them, and now it's up to the lenders to go through the process of trying to recover the loans before the government will pay out on them. So the government has backed the loans, but the lenders do need to go through the due process of seeking to try and recover them.
I think one issue that I found personally in the last 15, 16 months, the four main banks lent 92% of all CBILS loans, but the main four banks don't like spending money or don't like going after customers, or and even with the element of fraud, will they really want to spend money? I mean, I don't know what you think, Natalie. I don't know, Anna, if you've got any thoughts on that. I mean, we on the back end, on the insolvency side, when we have a nature of fraud, when we go to lenders, we found it quite difficult to get a lender to say, yes, we're happy for you to do an investigation, because almost they don't want to spend their money. Have you found that, Natalie?
I mean, there is an element of pushback. It's not an easy process. You've got to reinstate a lot of these companies that have been struck off. You've got to, in many instances, chase after monies that have long gone. But I think to the extent that the banks are mounting a portfolio, I think the larger that portfolio becomes, the more pressure they will be under to pursue those fraudsters, and they will not get the funds back from the government until they've gone through a process. So as long as, I mean, you're relying somewhat on the government to check this, but as long as they've gone through a process of seeking to recover and exhausting all measures, they're not going to get paid their money back. So in principle, the system sounds like it should work. It's just a question of whether or not there are funds within the government system to check all of these requests from banks for payments back.
Okay, thank you. Okay, the next question we've got here is: the fraud world can move very quick, very fast. What are some of the recent emerging trends that we need to be aware of and think about? I guess, Natalie, I've got to come back to you on that one.
Yes, sorry, I seem to be doing a lot of talking. Yes, some of the most recent trends. Well, I think it's important to remember that fraudsters can be both internal and external. Staff members, customers, suppliers, third parties. Understanding the nature of the frauds perpetrated over recent years will help businesses understand the threats to them and to protect themselves from becoming targets. there's three that I think we've seen and that we see all the time, and we can talk about these in due course. But the three the first one being online phishing attacks. It's your usual. You get an email or an attachment. You open it. Once that's opened, it exposes your business to malware. You might hold sensitive client information, which as a result of the attack becomes compromised, causing both financial and reputational damage. The second most common type we've seen is impersonation fraud, where fraudsters impersonate small loan providers, for instance, such as there's the Small Business Administration, which some of you might have come across. The fraudsters will elicit your company's financial details along with a deposit or fees. They might spoof the SBA email address or logo, or another email address or logo. They might offer government-backed loans that don't exist. And just to give you a figure that I found, impersonation scams almost doubled to 39,000 cases in 2020, and that was the largest increase of all scam types. The third most common is accounts payable fraud. Fraudsters will typically build trust and credit over time by placing small orders and paying their invoices as normal before eventually placing a large order and disappearing without payment. I previously said watch your employees. They fall within this category as well. Another common fraud involves employees creating fake invoices to skim off money into their own accounts. They might use shell companies to facilitate payments, taking monies for goods that don't exist, for example. And the authorized push payment fraud cases fall in this category, where customers are tricked into authorizing a payment to another account controlled by a criminal. Those increased by 22% to almost 150,000 in 2020. And purchase scams remain the most common form of APP fraud, amounting to 52% of APP fraud cases. So those are the three main scams that we're seeing the most of. I mean, there are variations of those, but those are the key three, if you like.
Thanks, Natalie. Okay, fraud networks are becoming increasingly sophisticated. Banking and telecom both have access to powerful data, sometimes mutually exclusive. Is data sharing something that we should be considered? Lots of information to intervene. Anna?
Thanks very much, Brendan. Yeah, and I think just touching on what Natalie said there around the authorised push payment scams, and that's the area that we've got sort of the most experience in, as with the governing body for the CRM code, and that provides protections for consumers and businesses against those app scams. And particularly when we look at how app scams come about and develop, and then where they end up. There's a real opportunity to improve customer protection, and this absolutely includes businesses. And the end point in the scam journey is with the bank, when an individual hits pay or they send their money, essentially. There's really only one opportunity at that point to intervene, and it's through a warning. And for businesses who process multiple payments at one time, I think it's almost impossible to circumvent this at times. Yet the losses, as Natalie's just highlighted, can be quite significant. And this is why the prevention piece, which you'll probably hear quite a lot from me on today, is so important. The CRM code, whilst it provides protections for businesses who bank with a signatory firm, can only go so far to break that spell or identify a scam. And so one of the things I think is really important, and back to your question, is around bringing those organisations together that you just mentioned, Brendan, such as telecoms and utilities as well, social media and online platforms, because I think it's the only way to really reduce the impact of this. And so back to data, we know there's lots of information and lots of challenges with data sharing. But much like moves in the financial services have been made, there are opportunities to share information about, say, the scam types, who they're targeting, and particularly to better understand the scam journey, how that scam takes place, how those platforms interact with each other, so that we can work together to clamp down on the scams. Looking at them in isolation, and organisations and sectors operating in isolation can only go so far. I think we need to, this is where more work needs to be done, to share information, working together, so that we can actually make better headway in this space.
Anna, I guess on that side there, has legislation been kept up with fraud, or are we just too slow in the process?
Well, I think the legislation and regulation, as we know, always takes time to introduce. And we've got a real issue of scale here that's going to take more than what we have now to tackle it. Because, as I say, it needs to bring in those multiple sectors so that it can be most effective. And we actually don't have a single regulatory body that can do that. And so this is a space where self-regulation can really add value. So just jumping back to the CRM code and scams as an example, almost 3 years ago, the CRM code came into effect and it was charged with tackling the prevention and response to app scams. And it still remains the only type of protection that there is in place. And so self-regulation can act really swiftly. It can identify areas of harm and risk. And through that agility, take steps to introduce standards, codes, or best practice to deliver those much needed protections. But it actually takes the industry to come together and to step up to the plate, basically. So evidencing its commitment to tackling such issues and doing that on a voluntary basis. And for those organisations that sign up to something I mentioned earlier, you know, they're also opening the door for having their processes reviewed through independent oversight. And so when you've got many organisations signed up to some voluntary standards, it does show the strength and commitment and the approach those organisations have collectively without being forced to. I think it sends quite a strong signal, but that oversight is absolutely critical because a code on its own, it's not strong enough. So it needs that oversight. It needs that organisation to be looking at how it's being applied, to placing those recommendations on those organisations where they're not getting it right, but also looking at the areas where they are, so you can help to raise those industry standards. So I think, you know, back to your question here is that self-regulation can help, but in this space, you know, we know regulation takes time to come in place. We need something that can help to bring multiple sectors together as well.
That, I mean, when you say that, this has got to be government-led.
Well, if it's government-led, then something will, you know, has to happen. But I think there's this big question about how does that happen when you've got multiple sectors involved here. So I think that the industry, and I'm using the financial services as an example, and the CRM code as an example, because this is where they have actually they are leading the way in the fight. There is something that they've all come together. And so actually, if other sectors can do the same sort of thing, and then something that sits on top of that brings everything together, that looks at common factors around how we can intervene and prevent these scams from happening in the first place. There are links between the organisations, because if we think about where the scam starts, it might come through as a text message or an email. You know, if we use Natalie's example earlier, these phishing emails, for example, that comes through online platforms. And then eventually it goes through to the banking piece. So there are more ways that we can intervene, and more ways that we can have this overarching principles. But I think, yeah, the government has to be involved in that process as well.
Thanks, Anna. Bryony, can I come on to you actually? So where should we share information versus not? Should everything be visible to everyone now?
It's a really good question, because the experience I shared earlier, the case that I shared with you, we did what we thought was right. And we, as was mentioned earlier, we went to Action Fraud. We spent quite a lot of time filling in the form on there. The response time on there was 30 days. And after 30 days, I got, again, another kick in the stomach where they said, we're not interested in this case. We don't feel it's any use us getting involved. So reporting it there didn't work for me. We then went to the police direct in Greater Manchester. They have actually given me a crime reference. Having said that, I've not heard from them for 2 weeks now. And the other thing we tried to do, and we think we should do, to answer your question, where should we? I think the more transparent we can be as a network of credit professionals and businesses that can help each other. We've got 3 very different angles on the panel today, is into the credit agencies. And again, I contacted through my network 3 out of 4 of our key agencies, and they said there's nothing we can do. And I said, well, if I run a report today, you're recommending, I don't know, £10,000 credit, open credit for this business who doesn't exist. We've told you it's a fraud, it's a scam. No, there's nothing we can do. So I've tried every angle, and I absolutely think we should share, and I think we should be really push on it. I think the other ladies may have an opinion on that as well when we chatted last week. The more sharing we do, the harder it's going to be for them to crack us, isn't it? Don't know if anybody's got an opinion on that.
Bryony, can I ask? I mean, I think I might have lost it earlier. I don't know if you mind, but how much was your loss?
£70,000, 70.
Because funny enough,
And it was over. Sorry.
No, sorry. Because I, as you know, I work with lots and lots of credit teams up and down the country, and I work hugely in the construction industry, representing pretty much the top 6 or 7 construction firms, and they all use action frauds, and it's a mixed bag. And I always feel it depends the value, normally 100k plus, but I do think that the time span is normally 30 to 60 days whenever I've used them. Which, as we know, is not great if the asset's going to be gone or the money's going to be gone by then. Natalie, Anna, any comments on what Bryony said?
Yeah, I think, Bryony, we've spoken about this before, and it really does link back to probably, the messaging that I've sort of been sending across the course of the session this morning. But I think there's some great initiatives across the industries to try and help tackle scams and fraud, but there isn't that joined up approach in all instances, and I think that is a key piece that's missing here, and so more work needs to be done in that space. And we know that the government are taking action, and we heard recently in the Queen's speech about the principles around reimbursement, but actually in that prevention piece, to stop you getting to that point, I think more needs to be done so that these good initiatives can all become more joined up across multiple sectors, so that we can really make some inroads into this financial crime challenge.
Thanks, Anna. On that, Bryony, as the credit manager on the call, how can businesses onboard, offboard customers securely and seamlessly, and how can we improve the onboarding process? Looking with obviously the emphasis on not getting frauds.
Yeah, well, we've brought in a lot of new things, and they're pretty simple. I'm sorry if it sounds pretty basic, but for example, we had another attempt. So that was the hit I've mentioned so far this morning. The other attempts were, it seemed too good to be true from a sales perspective, one of them. So I literally Googled the head office of, allegedly, the company the guy was calling from. I spoke to them, and they said, we've never heard of him. That was one. The other one of my colleagues did the same, and I said, just ring into the business. And again, it was a very clever twist on the domain name on their business. It was Lincoln, as in LINCOLN, and they'd changed the domain name to be NL. So the N and the L had been twisted in the domain name, and they were diverting all the traffic. But again, we found that out by calling the person who allegedly, or the company who had allegedly placed the order. Pretty basic. But in terms of our screening, we are checking, double checking, triple checking, because those things are very, very easy to miss. But we're double checking any order greater than 5k in my business, and we're a $16 billion company, but anything greater than 5k, we do a triple check at that point. We do all our normal credit agencies and everything else, but we definitely try and pick out where things might go astray. The other thing from a sales perspective, it was too good to be true. It was a security product. They didn't question the price, and they wanted a lot of them. So again, pretty basic. A salesman's eyes, dollar signs in their eyes. They're going, yeah, let's sell it. Let's get commission. But we just said to them, does that customer normally buy that product? Have they not quibbled on the price? Are they not talking about supply chain? Just basic business questions. So nothing dynamic, nothing revolutionary. Just go back through the basics.
Bryony, I think what that's such a great example. The examples that you've provided today are really useful. But one, highlighting how easy it can be to fall victim to these scams and the fraud in the first place. And the scammers are using such, I'll say simple, switching those letters around in that email, as you just described. It's so easy to miss, isn't it? So, and some of the examples you've shared with us recently, I think it just really highlights that point of got to be so vigilant, but you can absolutely see why so many businesses are falling into the trap of the scams and the fraud and the difficulties that this exposes. And I think, you know, just sharing some great insights there as to some of the steps that you guys are taking. And hoping, I think one of the things that we would say is around sharing that best practice piece. And what we would implore our registered firms to do is to help raise awareness to their customers about what those checks and balances can look like before they're making payments, about how to, you know, they're seeing an increase in certain types of scams or how they're coming across, just to try and raise awareness. And I think that's one of the responsibilities around that education and awareness piece. But it really does highlight how even if you're carrying out these checks, the sophistication and the social engineering, sometimes it's so strong, isn't it? It's still very difficult not to fall victim at times.
Yeah, I feel like I'm on a bit of a session where I'm declaring, you know, guilt for having a hit, but it's so important to share. I know somebody said, are we worried about the transparency of sharing? And yeah, maybe it should be regulated, but at the moment, my gain from today is that I'm sharing so that other people don't have that same experience. One other little thing, a shameless plug for the CICM, is obviously they do train on fraud, and there are fraud money laundering courses in the units at level 4, compliance level 5, you know, so, you know, as a CICM member, it's important that we put things out there and give tools for people to learn and share that best piece.
And Brian, coming on to that, there are quite a lot of credit forums now dedicated to fraud. You know, I know there's Forums International. There's quite a lot of them. Do you go to many of these?
My team do. So what I try and do, just who I am as a leader, I try and get my team engaged with those so that they can get to network, as I have done over the last 25 years plus. So we do attend. We find them very useful. Follow all the rules that we need to, but come back with real good insight, or come back and say we're doing all the right things. Sometimes we just come back and go, we feel good because we've captured all that already.
Okay.
But yeah, definitely benefit from them.
Thanks, Brian. Okay, I'm going to move on, well, not slightly away, but okay, identity systems, KYC, know your customer, are increasingly being attacked by fraudsters. What can businesses do to prevent being scammed? Natalie?
Yeah, sure. There's a number of options for businesses to take. For different types of fraud, obviously, you've got different measures you can take. To prevent technological fraud, you can use tools like IP address trackers, third-party payment processors, multi-factor authentication, and data encryption. It sounds daft, but the Met Police website is a good guide as to how to prevent businesses, and some of the tips sound really obvious, but you yourselves know your business best and are best placed to see when something's not right. As Bryony said earlier, be skeptical of opportunities which sound too good to be true. Understand your business inside out. Do your due diligence and know your customers and suppliers. Understand your finances and how money leaves your business, and ask for trade references and verify trading history with your customers. You can conduct annual financial audits. You can scrutinize reports closely to be sure that the balance sheet and income statement match up, in case you've got rogue employees. Ask for audit paperwork all the time. Put internal controls in place, internet controls, risk management controls, and controls like business fraud training, management reviews, counter-signature requirements can all help prevent it. Make it easy to file reports, provide an anonymous email address or phone line where employees can raise reports about red flags. Keep an eye out for those red flags. Look out for employees displaying sudden changes in behaviour. They might want to take control over something they've not wanted to take control over before, or they might be, it sounds obvious, but buying a new car or something, living beyond their means. I think from my perspective and what I quite often see is that people tend to delay, and when you discover you've been a victim to a fraud, it's so important to contact either a fraud solicitor or contact the police as soon as you can, because the quicker you discover the fraud and the quicker you take action, there is a likelihood, and I've seen it, and I've thankfully, had some successful results, that you can make a relatively quick and cost-effective recovery, but only if you act quickly.
Thanks.
But
Thanks,
I also agree that that there are many pros to sharing information, and I'm not the right person to ask as to which the best forum to use is, but also bear in mind that these fraudsters and criminals are sophisticated. We are doing our best to keep ahead of the game as to what they're up to, but it is I can fully appreciate that businesses don't have the time or the resource to dedicate to keeping up to speed with these scams.
Natalie, on that point, sorry to jump in, but how big is the threat to UK businesses from fraud?
I think it's enormous. I think some of the statistics I read out earlier, and as businesses go online, we're just subjecting themselves to more and more opportunities for the fraudsters. The ability to hack into businesses, into systems, is for some people very easy. And so I think that the fraud threat is just increasing, and many people are, in light of the pandemic, exploiting weaknesses that weren't otherwise there, and will continue to do so.
I know you kind of touched on it when we first started, but what can businesses do? Well, what can they do to stop fraud? I mean, it's a bit of an open-ended question, but any thoughts?
There isn't a simple answer to how to stop fraud. I think that the best advice I would give is do due diligence. Really, you're most likely to be subjected to a fraud when you've got a new party entering into your normal daily life. You really need to do your due diligence on those individuals and those suppliers. Get reference checks. Do as much research you can on them, speak to them, develop a relationship with them, have some human interaction, so that you can gauge whether or not, you know your business best. You will know whether or not they are saying the right things in order to be genuine and not a fraudster.
Thanks, Natalie. I've got one final question. There's a few points to this one. Do you think businesses, data providers, governments, and technology providers can come together to create an identity framework for the future? Anyone?
Well, I'm probably going to almost repeat the question to you, Brendan, but I think it's something that does need to be explored. At the risk of repeating myself today and boring the audience, I think it absolutely is needed. And I also just wanted to touch on something that Bryony mentioned earlier, and that was around, she's mentioned it a few times about feeling, I think you said embarrassed, Bryony, or like, I can't believe I'm saying this out loud, but actually that is, we talk about how we're getting the money back for the businesses, but actually the feeling that individuals are left with, whether from a business or a personal customer, for example, the feeling that they're left with after being scammed is, distress, embarrassment, shame, guilt, all of these different things. And reimbursement or getting that money back absolutely is important, but it doesn't extinguish those feelings. And that's one of the reasons that we're really keen to keep talking about prevention as well, and stopping the scams from happening in the first place, because it can have quite a profound impact on people. Certainly, Bryony has explained and given us some great examples today, and Natalie as well, about how to prevent these things from happening and what you're doing now. And unfortunately, very often they come into play after the event, but it can't expunge that emotional feeling. And so, yeah, absolutely, I think we do need that, bringing everybody together, Brendan, for sure.
Thanks, Anna. Bryony, Natalie, do you want to add anything on to that?
I think could you just repeat the question to me? Because I think the way you phrased it was, can we? Is that what you said?
Well, do you think businesses, data providers, governments, and technology providers can come together to create an identity framework
I think we can if we're all willing, and it needs all of that group or a subset of that group to be willing. So I think we should, and it's just whether everybody is willing to do so. And I think it's absolutely the right thing, as Anna just outlined.
Okay. Look, I've got a few questions from the audience. I'm just going to ask a couple. I'm going to go back to, I think, one of the first ones to you, Bryony. I think it was you. What excuse did the CRA use for not taking the information you supplied to them?
So Action Fraud. They said they didn't feel there was sufficient value in pursuing. Literally, it was really woolly wording. Sufficient value in pursuing the amount. They're sorry for our loss, literally, but they didn't feel there was anything. But on the back of that, the police, who I thought they worked back to, are we in collaboration correctly here? The police were interested, and he said, we've got video footage, we've got license plates, we've got, with CCTV, we've got the lot, we've got everything to capture this person or this group of people. And the police said, absolutely, if they're operating in our region, we want to get them. So I thought that was linked to Action Fraud and police, but Action Fraud dismissed it and the police took it up. So that's where I'm at a bit of a loss as to what the future should hold and how we can get that better. But they literally were very vague in the reason. Did you not mention that also regarding the actual, the credit reference agencies? Did they do anything? Oh, sorry, the agencies. I apologise. No, they did nothing. You can run the report on this business right now, and you will still get a credit rating on them. Even though that what was the business was an out and out fake business, was it? Out and out fake. It's still on Companies House. Still looking like it's absolutely fine. Directors are genuine. Everything on there looks genuine, but none of it is. It's a complete scam. And they said that they weren't prepared to do it because the records they held were valid, just based on our hit. Okay, let's see what else we've got here. I haven't given up on that because I know there might even be some of you on the call who know me. I haven't given up on it, so I will be talking to my network to make sure that that to me is just crazy. Okay, the next one I've got is information is being shared on suspected frauds, but is there enough participation who may be concerned about risks of sharing data? Do we need the FCA and other regulators to make clear that they expect participation in industry schemes? Anna, do you want to read that?
Brendan, I can't hear you because your signal was going, so you probably have to do that one again for me.
Sorry, so information is being shared on suspected frauds, but is there enough participation who may be concerned about risks of sharing data? Do we need the FCA and other regulators to make clear that they expect participation in industry schemes?
Yeah, I mean, there's always concern with information sharing, isn't there, and rightfully so, about what can be shared and what can't. And I think that statutory regulators encouraging firms to sign up to schemes and codes, for example, is really powerful and very helpful, certainly from our perspective as a self-regulatory body. That's certainly because you get power in numbers. The more people that are signed up to the code, for example, the more customers that are protected, because you're looking at both the sending and the receiving side of things. So actually there is absolutely strength in numbers. So I think as far as they can, then any support from regulators to get involved in initiatives or to support initiatives, I think that's very helpful. But I also accept that there is a bigger challenge in respect of information sharing. And I think there are some good initiatives coming down the track in respect of those. They need to be unpicked and built very carefully.
Okay, brilliant. Thanks, Anna. And the last question I've got here, and it's not really a question, it's basically, it says, I've been involved in credit circles before, and we have quarterly meetings to discuss the most troublesome customers, and we use this to close ranks on them and wouldn't get supplied. So good idea on sharing information. I run a few credit circles up and down the country in different sectors. The rules changed before my time, but in '86, where you can share information, you're just not allowed to share the amount. And credit circles are a good way to get to know your customer and get to know your market. So just add that onto it. Okay, Colin, I think we're pretty much wrapped up.
Lovely, thanks, Brendan. Yeah, really interesting and also very worrying as well with some of the stories there. it's actually quite fun. And then the company's house thing, that's probably the first rung of the chain that we're all, the credit management will probably consider and look at as an obvious one. And, that's already a hurdle that these fraudsters have overcome. So it's really worrying about how easy these people are getting by and doing things. And collaboration, as we always find in most of these things, is the key, but getting the right people around the table and having a serious conversation and getting these things moving forward is paramount. But it's a big job, and who leads on it? That's the next question as well. So where do we go from here? So it's important we have these kind of conversations, I think, on a regular basis, is just my opinion on fraud, because I think it's often overlooked as a kind of a nuisance on businesses. But anyway, that's most my opinion. I've jumped in on that. But yeah, no, I think we're obviously round up here and thank, obviously, there's some great, it's great to have the various panelists there, because it was a real mix of different backgrounds. And I think it's really good for everybody who tuned in, hopefully enjoyed that. So we're in this session now. We've got more to discuss. Our next session begins at 11:55. We're going to look at credit management and insolvency. But I'd like to end this session, obviously, by thanking our panelists, Natalie, Anna and Bryony, and of course, Brendan for his great insight. Brendan's going to be joining me on the next session at 11:55. If you want to log into that, there's a link in this platform. But for now, I'd like to say thanks to everybody who's joined us today, and hopefully we'll see you all soon on our next platform. Thanks a lot. Cheers. Bye.
Thanks, everyone.
Cheers.